Chapter number 6, Cash Flow Statement. Generally, revenue expenses and revenue incomes are disclosed in profit and loss statement, which is actual expense and revenue of the business, while equity, liabilities and assets are disclosed in balance sheet. So, profit and loss statement, which is prepared on mercantile base, shows profitability of the business. Balance sheet provides information about economic solvency. Besides profit and loss statement and balance sheet, cash flow statement is also included as a component of financial accounts. Amongst all the assets of the business, cash is the most liquid assets. So when I say about the most liquid assets, look on the screen. Suppose you have rupees 1 lakh and for 1 year you have kept it in locker. This will not give you any return. But if this 1 lakh is deposited in a bank, invested in share or debentures or invested in any opportunity would generate interest, dividend, profit. So the investment of cash is very essential creation of reward and earnings. The source of cash and applications of cash, both the decisions are very important. It is desirable to procure cash from an appropriate source at the same time. It is important to invest cash in appropriate opportunity. So we say cash flow statement discloses the sources of cash and applications of cash based on which investors can take investments decision in appropriate manner. The disclosure of cash flow statement is mandatory for those business entities whose equity or debt securities are listed or in the process of being listed on the Indian foreign stock exchanges. So we note two important points. As per Accounting Standard 3, disclosure of cash flow statement is mandatory from 1/4/2004 and onwards for certain business enterprises. Under Section 240 of Companies Act 2013, the cash flow statement is included in the definition of financial statements. So, what is cash flow? So, before we understand the meaning of cash flow, there are two types of cash flows. First, cash inflow. Second, cash outflow. Cash flow means receipt, payment of cash and cash equivalent. Now, what is cash equivalent? First, highly liquid short-term investments. Second, such investment which can be quickly and with accurate estimated price convertible into cash. Third, the investment in which the risk of changes in the price is very rare. Example, number 1, government securities. Second, any securities having above stated features. Now what is cash inflow? A transaction due to which cash or cash equivalent increases is known as cash inflow. What is cash outflow? A transaction due to which cash or cash equivalent decreases is known as cash outflow. So, three types of activities are disclosed in the cash flow statement. Any guessing? So, let us discuss. Number 1 is operating activities, second is investing activities, and third is financing activities. So, let us discuss first cash flow transaction of investing activities. investing activities arise from transactions of asset side of balance sheet. Yes, we would go on the asset side of balance sheet because there we invest. Investing activity means purchase, sale of long-term investments and other investments. Cash and cash equivalent are not included. Long-term assets are those assets which are not acquired for sale purpose. Purchase of such asset is treated as outflow and sale of such assets is treated as cash inflow. The income received due to investment, that is interest, dividend or rent, is included in investing activities. So, let us discuss cash inflow and outflow of investing activities. First, we will discuss cash inflow. Sale of fixed tangible assets, sale of fixed intangible assets, sale of long-term investments, that is investment of non-current assets like share, debentures, bonds, etc. Return of long-term lending. कैश इनफ्लो का मतलब है पैसा अंदर आएगा. कैश आउटफ्लो इसका मतलब होगा कैश बाहर जाएगा. तो कहां से बाहर जा सकता है पैसा? परचेज ऑफ फिक्स्ड टेंजिबल एसेट्स, परचेज ऑफ फिक्स्ड इंटेंजिबल एसेट्स, कैपिटलाइज एक्सपेंसेस, सेल्फ कंस्ट्रक्टेड एसेट्स, परचेज ऑफ लॉन्ग टर्म इन्वेस्टमेंट्स, investments of long-term assets. Example, shares, debentures, bonds, etc. Long-term lending. यहां से हमारा पैसा बाहर जाएगा. Let us take a look on question number 18. From the following information, calculate cash flow from investing activities. And the question says particular amount rupees. Sale of non-current investment 88,000, purchase of land 1,48,000, purchase of machine 98,000, sale of furniture 45,000, dividend received on investment 40,000, paid for goodwill 32,000, issue of shares 1,20,000, redemption of debentures 45,000, loan borrowed 28,000. So now we have to solve on investing activities. So, sale of non-current investment will be considered. Purchase of land, money goes out, so it will be minus. Purchase of machine, we purchase the machine, cash goes out. Sale of furniture, money comes in. Dividend received on investment, money comes in. So, paid for goodwill, 32,000, money comes in. Rest is not the asset. So, the following balances appear and we would like to say that statement of cash flow from investing activities. Those figures which are in bracket, it means they have to be deducted. So, after deducting, we will get cash flow from investing activities and the total would be 1,05,000. Next question, question number 19. Statement of cash flow from investing activities. The question is in front of you, particular. Now over here two balances has been given. The first balance is 31,316 and second is 31,317. Plant and machinery, depreciation fund on plant and machinery, goodwill, patent, 10% investment, general reserve, profit and loss account, equity share capital, bank loan, current liabilities, interest received on investment rupees 18,000 and some of the patents were sold during the year. So here we go with investing activities. So over here we will consider plant and machinery, patent, 10% investment, And at last, interest received on investment rupees 18,000. So let us solve this sum. The following figures would appear. For solving this sum, the rest of the figure are not considered in investing activities. So here is a statement of cash flow from investing activities. Particular amount. Plant and machinery. Now if you see on 31/3/16 balance is 7,20,000. On 31/3/17 you would say 9,20,000. So what is the difference? 2 lakh. Now plant and machinery has been purchased, so the following figure would be deducted. Now we look towards the pattern. Now we have sold the pattern. How we come to know? On 31/3/16 the balance was 1,30,000. Now the pattern is 70,000, so that means we have sold. So the amount comes in 60,000. 10% of investment has been sold. Again, on 31/3/16 we were having a balance 2,70,000. Now the balance is 95,000. So 2,70,000 minus 95,000 will give you 1,75,000. We have received the interest on investments, rupees 18,000. So we would like to total now. So we will say that cash flow from investing activities. Now making the total 60,000 plus 1,75,000 plus 18,000 minus 2 lakh, we get the balance 53,000. Now we move towards the cash flow transactions of financing activities. Financing activities arise from transactions of equity and liabilities of balance sheet. Financing activities are such activities due to which size or composition of owner's capital, that is including the preference share capital and borrowed capital of business, get changed. Financing activities have relation with increase or decrease of equity share capital, preference share capital, debentures, loan, etc. Increase in long-term owner's capital and borrowed capital shows cash inflow. Reduction in long-term owner's capital and borrowed capital shows cash outflow. So, let us look into the cash inflow and outflow of financing activities. Cash inflow. Issue of equity share, issue of preference share, issue of debentures, procurement of long and creation of long-term liabilities, increase in bank overdraft. We talk about the cash outflow. Buyback of equity shares, redemption of preference shares. Redemption means we have to pay. Redemption of loan or any other long-term liabilities. Dividend payment on equity share, capital and preference share capital. Reduction in bank overdraft. Interest paid on debt. So let us look towards the question number 20. From the following information, calculate cash flow from financing activities. So the question is, particular purchase of land 1,88,000, equity share issued 1,45,000, redemption of preference shares 60,000, redemption of debentures 70,000, borrowed bank loan 90,000, debenture interest paid 6,000, dividend paid 8,000, dividend interest received 9,000, sale of furniture 32,000, purchase of machine 68,000, interest received on investment 13,000, paid for patents 19,000. So we have been told to find out cash flow from financing activities. So over here equity share issued will be considered. Redemption of preferences, borrowed bank loan, redemption of debentures, debenture interest paid, dividend paid. So these are the following items which we are going to consider. Over here, redemption of preferences, redemption of debentures, debenture interest paid and dividend paid. From here, the cash goes out, so they are going to be deducted. So we will be left with the following. So statement of cash flow from financing activities. Now we make the total, that is cash flow from financing activities. 1,45,000 minus 60,000 minus 70,000 plus 90,000 minus 6,000 minus 8,000. So we get the balance 91,000.